Hello guys, and good evening, good morning, good afternoon, depending on the time you are watching this very video. Actually, I recorded the video before now explaining some things, but as I don't know what happened, my my voice recorder didn't take effect, so I have to do it all over again. So I'm just going to show you something now. This is on 5 minute time frame. So in the course of the explanation, I'm going to show you what I did. Please take note of something here now. Take note of this where's my okay. Take note of this area, you see my TP. This line you saw is my TP. Take note of this BOS here. There is a BOS here. Please maybe let me bold the chart. I pray it comes up, you see it properly. Now you can see there is a BOS here. Right, you can see there is a BOS here. Good. Then you see where I put my TP. It was even I just wanted to record before I noticed this move. Before I noticed this move. So please kindly pay attention because I have so many things I need to explain to you regarding what I did there and why I did that. So first, I told you initially I'm going to give you a complete details, but let's just since this is a trade that I came to meet because I was planning to create another video explaining some vital things to you guys before I go. So on 1 hour, I saw price where at the area of interest. Let me zoom in again. I go to 1 hour and I saw price at the area of interest. You know, I told you that we should always wait for our indicator to give us area of interest, right? I believe those of you who have been following the class by now, you should know that those are the things I explained in there. So I said you should go for price to get to area of interest, and truly price was at area of interest. So what happened? I came back straight to 1 minute to see what was going on. I now noticed that price created a BOS and immediately price created a BOS, it came down, went back into that BOS. It was because price went into that BOS now, which is this one in 5 minutes. Hmm? It gave me a break of structure. I've seen it. So I was waiting for price to go back in. Price went back into that BOS. Then immediately get to the BOS. As it closed it, though I was a bit late. Let me be here. So I took a sell. So this was the swing low. This is where I put my take profit because this is where exactly price started pushing up. So price is coming towards this direction. It will definitely break below it or whatsoever. But this one is just a tutorial class. And now, at least only this short move, though it is small, but nevertheless, it meets all the criteria I needed for entry. So when you put my, let's say I put my, what is it called? Let me put my cursor close to it. It's about $2 for one trade. So if you are taking two trades, that should be about $4. There are some days it gives you something more. I just want to follow the principle based on the strategy, guys. I just want to follow based on the strategy how I use it. So I want to see price come into the other zone. Then it came into that zone. Now price is coming. So if price close at profit here, definitely forget all these things it's creating. It is from 1 hour. What I needed to see is from 1 hour, and everything has taken place. So I have no other shop that to do what I have to do. So this is my area of target. Then if I wanted to plot my stop loss, this is my area of stop loss here. This is where I will just put. I'll copy the code, which is let me zoom out for you so that you know how to do it. Let me zoom out just because of some time. So you see where this line is above here. You can see. Let me put an arrow because I don't like. You see this place, the top. So the digit here is around. I think is 4803. So that my 4803 will be my stop loss. 4803 will be what? My stop loss. That is where I'm going to put my stop loss. So since it's 5 minutes, it can't take much. It can't take much. It was because I delayed. If I entered at this point, at least it will be up to $4, if not at least close to $3 to $4 for this. It will be up to even $5 for this entry. So it has gone almost more than close to halfway. You see, this is 50 now. Retracement 50. So it has gone halfway before I took the trade. So that was why. But this is where I put my TP. I just this close to the swing low. Close to the swing low. That's where I put my TP. The reason why I did all this is because criteria was met in 4 hours and 1 hour. That was our arrangement. Then when they say confirmation, you go to 15 minutes and confirm what kind of shape, what kind of pattern candle is forming. Mhm. You can see that it's giving you a bearish move. Can you see now? It's giving us a bearish move. If that one finish, if you still give me another block here, I will still enter again. Oh. That is the advantage of taking that one I'm doing in 5 minutes is called sniper entry. So if the conditions still come to take place, let me clean all these jargons. If it happens that it breaks structure and give me what is called what's it called? It gave me another it gave me another other block on 15 minutes. I will still execute. Since price will come back, it will give me a BOS. Price will come into that BOS. And when it's coming down again, I will still take my sell. Is that clear? But this thing I've been doing this since morning. It has been doing like this since morning. So it is because one, it has given me in 5 minutes earlier before 15 minutes. That's why I executed my trade. And you can see in what's it called? In Forex, this pattern is called this is what? A rejection. Oh god, this is an inverted hammer, showing that what price is trying to go up, sellers are telling you go down, sellers are in charge. This is indication that sellers are what in charge. This is more or less like a double top. Eh? Let me put the other indicator, that money mouse. Let's see, because all these things I really want you to have a clear understanding of what price is doing. Let me put the other indicator called the money his, and let's see what price is doing. And we have not started today's class, so I just want to show you all this before I go into today's class. Let me go into money. Where is it? Where is it? My okay, money is. Where is money is? Okay, this is money is. Now let me delete other indicators. Then let's leave all those ones I needed. I don't need perfect. I'll delete it. I'll delete this. I need the pivot point. I need them best. I need these people. I think I need this 1, 2, 3, 4, 5. I need them. So let's go back to our 5 minutes now. So you see that there is a rejection. Do you see what I was saying? Okay, it didn't take effect on this second one. It was only this first one. No problem. So let's go to our 5 minutes now and let's see what price is doing there. M5. Okay, no problem. So definitely his price is going to be creating lower low. Now let's check how much profit has he made so far. Control T. It has made about $1 plus. So I think the trader. So this is, even though it's retesting, it's not my business. It is coming down. This place there is no pressure for up. Forget all this one is doing is just camouflage. So let's leave it and let's go into our today's activity. I will leave it like this because the conditions are properly met. So that is just it. But I entered very late because I knew I was preparing for this class before I took this entry. I was preparing for this class. It has given us BOS. Price went into the other block, like I used to tell you. Then immediately it closes, then you take your what? Your sell entry. So that is everything we need. This is what I've been explaining to you. Price gave me other block. It showed it. I waited for price to get, when it got to this point, it entered back into the other block. It might take some time. Immediately enter into the other block, we will take our sell. So that is what I am explaining. Even though it's $2, if you keep doing it for 5 times in a day, if you are possible, you can see up to 3, 4, or 5 opportunity once. Then there are days it will give you more than this. So definitely, when you accumulate those money, you see you'll be making cool money on it. So that is that. You see, when it evaluates this other block now, that is final. This place becomes irrelevant. This is 5 minutes. It can't be as solid as a what's it called, 15 minutes another frame. So let's leave it and let's go into today's class. In today's class, I'm going to be, there's a written aspect, then I'll be explaining those written aspects for you. Because some of you will be asking you, admin, please, this POS, what are you calling it? POI. What does it really stand when we want to talk about it in Forex terms? Now, what it means in Forex terms is, let me just go into the write up so that I don't, let's move up. Let's move up. So now it means order blocks. And in forex trading, order blocks means where the institutional candles are. That means the market makers where they put their what institutional candle. So when they set up the institutional candle, price has to go back to mitigate that institutional candle before it goes towards the direction. What did I mean by mitigate? Mitigate in terms of trading mean to reduce risk. And before mitigation comes in place, there's usually an imbalance. But let's define what order block is. Order block represents candles where market makers, which is the bank, strategically establish their position. Typically, the market visits these specific candles and they remain unbroken. If they genuinely qualify as order blocks, that means if they really qualify, if they are not qualified as order block, then there's possibility that it's going to be broken. So the criteria for it to be qualified as an order block is still stated in this uh, article. So I'm going to put it out, read everything, and explain to you in details. Now we have two major types of order block. We have the first one, the bullish order block, and the bearish order block. So what is a bullish order block? What is a bullish order? Bullish order blocks refers to the final bearish candle. Final bearish candle preceding, that means that took before a bullish market, before a bullish market movement, breaking the market structure higher, breaking the market structure higher. It signifies a strong likelihood of providing support when the price return to the level. They said bullish order block. Let's go to the chart. I really need to put all these things in play for you. Okay, now this is a bullish order block. This is still 5 minutes, right? Our trade is still on. Oh, share you the same. Those of you that will say I did not do live trade, you can't see what I was saying. I was glad this one even came, but it came late. How I wish I had known. I was busy all day. I would have taken the necessary steps to highlight it. So whatever be the case, you see the end result here. That is why I think let me zoom it out a bit. So this is a bullish order block. Where's my okay? This is a bullish order block. And now they say the last bearish candle, right? This is the last bearish candle here. Can you see? Let me remove it for a while so that you can get this class clearly and clearly. So I've removed it. This was the last bullish bearish candle. I'm just in higher time frame, not lower time frame. Because higher time frame, not in this small time frame. So this was the last bearish candle, right? Before the break of structure here, right? So, and it's highlighted it as what? Other bullish block, meaning that when price is coming down in higher time frame, I'm just using this one as an illustration, meaning that when price is coming down, it's going to act as what? As a support. That is why we are always laying emphasis that if you want to take a buy or if you are looking for a buy setup, wait for price to get to your area of interest in higher time frame. Area of interest in higher time frame. Mark that word, area of interest in higher time frame. So if this area, this other block here, this bullish order block here was an area of interest in higher time frame. So this is the area we will be looking for a bullish move, that means a buy setup. So we wait for price to come into that zone, then we come to our lower time frame, which is the 5 minute, to look for a buy setup. And when we get the buy setup, like what we have here for down sell, for the sell move, we'll take what? We'll take our order. Hello, hope you now dey see this market. Abi you dey sleep? Una no wan fit sleep. So we wait for price to come to this zone, to this area where it is now, to give us a buy setup, just like as it has given us a bearish setup before we took that sell, before I took that sell earlier. So we look for buy setup, then place our order when price, once it meet it. Then if we place it, then this is our swing high. So if everything align in this area, then this is our swing high. This is where we are taking our profit from. So that is why it stated that the last bearish candle, which give us the up move, breaking structure. This is the last bearish candle that led to the breaking of structure. So we take this point as what? As our area of interest for bullish movement. So let me put back the what is it called? The the order block schedule. So you see that it has cleared all those nonsense. Because why? The time frame, higher time frame is on bearish move. So anything buy is countering it. So let's leave it. I'm so glad that this one is taking effect. So now let's check how much it has getting. Don't 1.79. So if you even take three order, you've made them almost close to seven, or I'm sorry, close to, yes, you'll be making roughly $5. Just allow everything align. Don't be greedy, but I don't advise you open multiple trades, multiple order if you don't have enough equity. Please, if you don't have, don't try it. Don't, don't. So that is that for um bullish order block. Eh? That is that for bullish order block. So let's go back to our article. So we've seen what bullish order block is, right? So now let's check what bearish order block is talking about. Okay, before then, I think I have one in my article here that I will use as also a area of reference for you. Area of reference again. So because this thing we are really doing it so that your money you paid, you can see the effect, and you not just solely see it once. It will be a continual process. It is a code. You have to crack it. Yeah, this is an empty check. You have to make sure you get it, and you'll be cashing out. If others are complaining, dollar is increasing, you have no business with anybody. If dollar increases, you should be happy if dollar is increasing, so that when you make enough dollar, you come and you booga everybody. Kidding anyway. Let's go there. Now you see in this page or picture in my chart, you can see that price break what when price was going up. The last bearish candle. Can you see the last bearish candle here? Yeah, let me show you people. This is the last bearish candle that led to what? The break of structure. You see it? This was the last bearish candle at the end that led to the break of structure. So this is 4 hours though. Immediately you break it, you've seen it. You will not be waiting. This is not 4 hours. I will be waiting. You'll be waiting until price come back here. So when price come back here, there are still orders left. You see, those market makers, they don't push out their order once. They don't push out their other ones. And what I want you to notice, when price breaks structure or on its way to break structure, you will notice that if it is a bullish move, you will notice an imbalance. Even in this one, it was not. There was still a bearish candle. Then in some cases, all you'll be seeing is bullish candle, which means an imbalance. It is called liquidity. All this move upward is called liquidity. So some traders who don't like who like following trend, some can follow it as if they are not professional. They'll follow it. Some will just join. Look, just imagine you join buy at this point, my brother. This candle here, you join buy. It did not even move like 3 kilometers. It started dropping. You'll still be holding. It will reverse. It's just trying to. It will reverse. You'll be expecting it to. It will never reverse until it enter into that block. Can you see? And at the end of the day, you'll be shouting somebody is controlling it. They notice you've placed trade. That's why they pack your money. And you don't know that nobody has your time. Nobody get your time. Nobody get your time. So price fall into the other block. And what do we notice again? Price started pushing up. By then, in your lower time frame, you waited for price to give you this same thing it gave us in what's it called? What we just saw. Do you see that my trade have closed on profit? Do you see that it has closed on profit now? Is it a win or not a win? So this is it. This is how it works. You don't need anything. You don't need any magic. It has closed on profit. So that aside, let's go back to class. I'm so glad this one even came up. So even though it's small, this is how it's done. So to why? Or buy me mineral. Let me know that you know. So let's go back to the chart. So immediately it gives us that information that led to that entry or that winning. What we will be waiting for next is what? We'll take once it gives us price comes there, so we'll be waiting for a bullish setup in our lower time frame. Then we take it and we take profit at the what peak, at the peak of what the entry. Is that clear? We take our TP at the peak of the entry. This is what is happening. That is why all this issue of marking BOS will have been stressed to you if you don't have a software doing all this. But glory be to God, you have a software in your position that will do all you just need is you wait patiently. It's not necessary you sit down on the laptop 24/7. Since you've seen it, highlight the area you want price to come into in that high time frame. Then you can be watching it from your phone while you shut down your laptop. So when you check your phone and you notice price is approaching that zone, you go back to your laptop and see what is happening. Is there a BOS? Has there been a retest in that time frame? Is it time to enter? If not, wait a little bit, then that is it. So I think we've done justice to this aspect now. He said the bearish candle before the bullish move that that made a break of market structure higher. That means it go above the BOS. So that is what he's saying here, and that is what I just explained, and I showed you the practical in Boom 500. So I think we are done with bullish side. I think the reverse is a case for bearish bearish order block. So please, you can see all these things is plain. I'm not here to joke with you. If you don't know it, you'll be in trouble. I will flog nonsense out of. Sorry, okay. I thought I'm in a primary class. Anyway, let's joke and let's make money. What is bearish order block? The bearish order block is the most recent bullish candle. Most recent bullish candle for a bearish market movement, disrupting the market structure lower. That means making it go lower. It indicates a significant potential for price support upon its return. That means it will act as what? Support when price come back there. Initially, it is the resistance. Now, when price now come back, it will now act as what? Support. Then it will start falling. It will start what? Falling. It will start what? Okay. Thank you. So, what happened? They said bearish. Now, let's go back to what just happened in Boom 500 that I took trade now. So can you see why I took my trade? So you see I've exit because that I make sure it was a swing low. I took it. So if price like go back there again, I will still execute it and we will come down. So it's an opportunity zone for me to do and undo. But I'm only joking. We don't do and undo. This one now is retesting. So if it's come back, we'll be waiting for the outcome in 15 minutes. So until it give us BOS in 15 minutes, retest it, then we'll enter again. Is that clear? But since the 15 minutes have not given us, but 5 minutes have given us what we need. So, and we have made money. We'll be waiting for 15 minutes to give us, or we still wait for 5 minutes to give us another one. So, let me explain what happened in 5 minutes, not quite long. So, price got this was the last. Let me remove it again. This was the last bullish candle. Hello, are you with me? This was the last bullish candle that led to what? To the break of structure that took place here. So, it now becomes our area of interest. So they said we should wait that when price come into that zone, it will be acting as what? Support. Initially, it was a resistance. That was why your price was coming down. And so it was, yes, it will still act as a resistance or support, though depending on the entry you are taking. So price now got there again. Price started depreciating. That is why I have the confidence. But I did not do all the analysis in 5 minutes. Oh, don't forget to. It was because price got to area of interest in 1 hour. Hey, okay. Don't go and use 5 minutes and say admin say then if you just enter. No, do it from 1 hour. Take 15 minutes before you execute your trade. Though all those things you are going to learn them today. It's just for you to now go and practicalize them on your chart. So right here, price came in. I will immediately tap into my order block and I put my imbalance. I noticed it as I executed my trade. That is why I was able to win this very trade. That was why I was able to win this very trade here in 5 minutes. So that is what is it called? Bearish order block is all about. They said the last bearish candle that leads to BOS. If price come into that zone and we test that zone as where it is, because this is an institutional candle here. Yes, it is an institutional candle. So the many order that is left is what they just dispatch now. Orders that remain for down to go down is what they dispatch. But when price is coming and it has not getting into this zone here, when this price was coming down like this and does not go to this up, it is called liquidity. But immediately it get here and later went inside that zone, it is called mitigated. So price has mitigated the other block, and it is now what? Time to sell. What is mitigation? Mitigation is reducing of risk. How? How is this reduction of risk? Simply, since price came to mitigate this other block, hmm, if I'm placing my sell, my stop loss will be in my swing high here. So compared to somebody, hello, hope you are not sleeping. Compared to somebody who plays, let's say, the person that plays let's say the person plays a sell here. Hmm? This point. Let me clean this thing and explain this thing because I don't. You must make money. 2024 is a year of making money. uh So this is here. This is what price did when this thing was coming down. Okay. This is the point. When this is the BOS area. This was the last bullish candle that led to the break of structure of this structure. Let me put those two there. So when price was coming down like this, somebody who doesn't have this knowledge of trading can possibly open what? A sell here, right? The person did not know that there is a BOS already and price has to go and mitigate before it start coming down. Or some cases it not even give BOS. It's yet to give a BOS. Let's even say it has not even given BOS. So all of a sudden, price came to this zone and started going up. It did not give us BOS. It just decided to push up. That person has it. The person win or lose? It the person has lose. So another one, it gave us a BOS. Now that the person took a sell here, you said lie oh, because you have knowledge of what market price is doing. I said you want price to come and mitigate this other block to reduce your risk, right? Immediately price came into that zone, you place your sell. Now when the person is making maybe 50 cents, you're already in $2 or $3 plus, then you take profit. And if it's not careful, price may not even go down further. It may just decide to break above it. Oh damn it. Are you seeing what I'm saying? So it's about the price may not even go further. Price will just break above it. And I hope you are learning something now. Had it been I was greedy, I was saying maybe this is where price is coming. I've refused because this is the place where price reached. It started going back. So it is where you are going to put your TP. In fact, you move it a bit so that it will quickly come before it get to this swing low. In another class, I will tell you what this swing low mean. This this thing will be like needle. I will tell you what it means in another class. Eh? I will explain to you. So you are out of the market on profit already. The person will still be crying, my money they burn, my money they burn. You will be saying they are manipulating the market against him or her. So just trade it as I've been explaining it. Please. As I dey explain am, na so make you dey use am trade. So because if you inbox me any day you lose money with my strategy, I will curse you. Sorry, I will not curse you, but I will tell you the right thing to do. Okay, so that is what it means by bearish order block. It will the last what's it called? The last bullish candle that led to break of structure is the one that will give us order block. So we are now waiting for price to come to mitigate it. Then we take it. Then here that price go to that before it start coming up, will now be area of exit. That is why my trade I took was on profit. It closed in your eye. See the entry here. See the close here. That is why it's $2 plus. So if I had opened 4 trade, I've made $4. If I open 5 trade, I've made $10. That is 10K in less than 1 hour. Then you say forex is not a sweet business on your own. No. So it has mitigated and everything has aligned because we did our analysis from what for 1 hour, which is our where we put our area of interest or our POI. So I think that is that. I've done justice to this aspect. So let me clean it and put back my other block and this thing. So if you still create another block, bearish other block, meaning creating lower low. Now it is equal low. This is what is called equal low. It did not go low. Had it be go low, you just see BOS again, but it is equal low. So if it come and give me another this thing, break of structure, then it mitigate it, I will still enter because on higher time frame, it is what on a bearish move and it is in area of our interest. So let's still move on. All said and done, let's go back to our article and then let's quickly finish this class. so that I have something smelling in boom 1000. Let me see if it's going to work out. So let me move it down a bit. Let me shift it a bit. Now tradable order blocks. That is where we are now. Tradable order blocks. Now, what this thing is highlighting, what I want you to know is that not every order block, though if even though it's in a higher time frame, not every order block are tradable. Hmm? But this software has helped you to highlight. So most of your owns, majority of your owns will be tradable. And I'm going to tell you characteristics of a tradable order block. I will explain to you and what you are going to see in the course of this thing. Please, as I'm explaining, if you need to jot down, jot down. If you need to watch this video 2 3 times, even 10 times before you grab it, do it, because if you fuck up in 2024, you are a Jones. So sorry, I don't know who I'm talking to. All right, let's move in. Now, tradable order blocks characteristics. Order blocks should be positioned at or near a support or resistance zone level. That is number one criteria. For you to see this order block on high time frame and say this order block is a suitable one for you to trade, let it be positioned. Most especially since it's for sell. For sell, we are expecting the order block to occur in a resistance zone on higher time frame. So when we see price on a resistance zone on higher time frame, either there's another block there or there's no other block there. We come to 5 minutes and look for other block for 5 minutes so that we leverage on it. Sometimes there might not be other block there. That is bearish other block. So don't say until you see it there. No. There are instances that it doesn't take place there. But when you come to the other time frame, it will just give you quick snap entry to leverage on. And how do you know when it gives you? It will give you a BOS. Price will mitigate that BOS. Then you leverage on it. Just what happened into that trade I took not quite long. So that is number one characteristic. Number two characteristic, OBS should be located at or near flip zones area. I'm going to explain that flip zones, which are advantageous for reversal entries. So I'm going to also explain what flip zones mean. Then number three, the creation of an order block must involve breaking the market structure. That means you must see a break of market structure before we identify that block as an order block. Then four, there should be an imbalance. Yes, after the OB. After the OB is formed, with the imbalance being twice the OB size. That means it should be twice of the OB size. The risk to reward ratio must be 3 times the OB. So this is, let's go back to boom 500. Let me explain some things to you. Now, they said the first criteria. They said the first criteria that I will discuss the one of a resistance area. That one is on a higher time frame. But since it's on a lower time frame here, yes, it's still on a resistance area, but it is not usually seen. So we prefer the one on a higher time frame to be at a resistance area so that we have the confidence to come and do whatever I want to do in a lower time frame. Now, in lower time frame, we want to see a break of structure like this. Price come down. When they say imbalance, you see all these bearish candle, they are imbalance. I told you earlier on, it is called liquidity void. This is I think sell bias liquidity sell imbalance side. I will tell you the meaning when I get it. So this is a BOS on it. So this the first thing we want to see a break of structure, good, and which is also, if you count the candle now between where there's a BOS and the one before market reverse, you notice it's 1 2 3 4 almost 6 candles. So it's more, it has met the criteria of what is said here, that it should be uh twice the BOS. So then when it got there, the next thing we want to see is price to come into that zone. When price come into that zone, that is only when we are going to execute. There are instances you will see BOS, price no go enter the zone. Price go dey go down, e go just dey give you BOS dey go. Only take or trade the one that price mitigated. Otherwise, you will do what is not good. And if it's good, even though it's going to mitigate it, still check what is happening in your higher time frame. Is that clear? So that you don't endanger your capital or your equity. So all said and done, I think I've explained what it means for you to see price have a break of structure, price go back into the zone, before you take your sell. Then let me explain that of the support and resistance zone it was talking. So that one is on 1 hour time frame. 1 hour time frame. Now, if you check 1 hour time frame where this thing happen, you notice that it's at a resistance zone. For those of you who are asking admin, you said we should not use all the indicators you gave us for trading so that it doesn't look so complex or doesn't look too much on our chart, because when it's too much and you can't identify their function, it becomes analysis paralysis. It is not giving you it is not giving you any info at that moment. You'll be confused. So for now, you've known the indicators you should use. Indicators that is going to highlight areas of support and resistance is the fib resistance support, the support and resistance pivot point. Because you can see what price is doing now. Shaking zoom and see target only. See what did price do in our area of interest. You see that there's a resistance here, pivot point resistance zone. So that one alone should say true price is for resistance zone. That is for sell. So price not go do anyhow. And do you see where his price coming? And this one is going to be acting as support. Hmm? So this price is coming, can come all the way down, but we have eaten what we want to eat. So the only thing we do, we waiting for it on 15 minutes. If it's going to come down, we will know in 15 minutes time frame. But with that of the 5 minutes, we have chopped it and clean out. So that is for price to be at a resistance zone. So for a tradable order block should be at a resistance zone for sell. Then for support, for buy, it should be at a support zone. You can see that this one too is at a buy zone because I can see the Fibonacci. Let me even remove the other block this thing so that you see what I'm saying. This is a buy zone. Oh, so is it a legit one? Let me show you if it is legit or not. Let me remove it. Let me remove the other block. Now you see that so what do you see now? Support, right? So and that Sorry, there was a break in transmission due to the fact that my earphone off. So I think you must have understand some parts before now. My speaker off. So number 5, all what I was explaining initially, I think you must have seen those trades in the other aspect, in the other side, where I explained how I took trade, the reasons why I took trade, and everything. So the last part of this class is a bearish OB must be positioned above the support and resistance, which I've explained along the line. Then chapter 2, the time frame matrix. Whichever method you are trading, you need to have a good time frame. You need to have a good time frame. You need to have a good time frame matrix. In place, so that you don't just place order like a gambler. So now, here it has highlighted the kind of how you are going to position your matrix in terms of entry and exit. Your POI should appear at your, if it appears at your monthly time frame, you should look for a confirmation in your weekly time frame. Then you should take your entry in your daily time frame. That's for swing traders. So likewise, if you are using the week, if you are using the daily, but we are using the 1 hour. That is why we want to see our OB on the point of interest or area of interest, or OB on 1 hour, confirmation on 15-minute time frame, then entry in 5 minutes, 3 minutes, up to 1 minute time frame. So because my earphone or my speaker, maybe you've been watching this video, you notice at a point you couldn't hear my voice. Please, this is the second time I'm recording. I won't cut this one. So what I'm going to do, I'm going to do a quick recap. On what I've been explaining since, so that you get it clearly. Maybe as time goes on in other classes, I'll make reference to them. But for now, I will never ever cut this one. I'm going to leave it. I'm going to do a quick recap because my microphone went off. I get the battery was low. So I've recorded an hour, a complete 1 hour video earlier on, and I don't know what happened. It just went off. So I beg. I'm very exhausted now. So let me go back to the top. For those of you, I'm sorry, I believe you see the trade that took place in Boom 500 that I show you in 5 minutes. How I executed that trade, how I made profit, right? I believe many of you saw it. Yes, you definitely you will see it. What happened? Let me zoom out for you. I went to 1 hour time frame. 1 hour is in my area of interest. You can see it, area of supply zone. There was a BOS, so price is now retesting that zone for the first time. Do you see how many hours price went before it came back to that place? It was not a child's play. So sometimes it might, maybe there are some ones it mitigated along the line before it get to this one. So I waited for price to mitigate it, and price did to mitigate it in this place. So I went to 5 minutes. I was even late. I was late. So let me show you how the whole thing played before I win that trade, or before that trade fall in profit. Let me zoom out. Pico. So the first thing that drew my attention was when it created a BOS, indicating that this is an order block. But that doesn't mean I should take my trade, because it has to create an imbalance. And I told you that imbalance, in a situation whereby you are seeing bearish candle dropping without an interference of green candle or bullish candle, it is an imbalance. In forex, it is called imbalance, and it's also called liquidity. So until that liquidity is being void, that is when we do the necessary thing. So now I waited for it. It got to this point here. Then it started going back. I was glad. Bagam, he entered into the other block. If I wanted to take this trade from here, my stop loss would be at this top of this Fibonacci, which is 100. That 100 level, that is where my stop loss will be if I want to go extreme. So then I will take, I was late. You see where I take my buy, you can see the sign there, sell. I'm sorry, I took my sell. I took it because this was the area where price got to before it go. So I put my take profit in the swing low. This is it, my target. Can you see it? That was my target. So price indeed came and I win it, and each trade was giving $2. So I think I opened about 5 trade or so. So as I'm speaking to you now, I'm on $10 profit on this very trade. So now, why do we always wait for price to get to area of POI in 1 hour? I want to tell you now. I know I've explained, but I don't know which time this thing off. So I have to do a quick recap. So if this video is too long, I'm sorry. I'm very, very sorry. So now let me go back to why I did this trading, or I took this order. Sorry, I've already told you that it was because price was in my area of interest in 1 hour, right? Now I have an article regarding this strategy. So what we did now is called trading the order blocks. And what is order block? You might be hearing this word order block. Some people have been even watching videos of it online, but till date they didn't understand how to trade it. It is because you don't have somebody to put you through, but now you have somebody that will put you through. Because you see that order block, that is where the marketers, the market makers, that is where they put their institution. They still have orders left. It is when all these things meet, then you know that yes, you are winning it. Because if it doesn't meet, you will not win it. So that's why you have to have patience for everything. Let there be POS. Let price mitigate or go back into that order block before you execute a sell order or a buy order, whichever one that comes. What is an order block? An order block represents a candle where market makers, bank, strategically establish their positions. Typically, the market revisits those specific candles and they remain unbroken. That means you can see it was unbroken. When price got to that place, when price got to that place, sorry, price didn't break above it. Did you see it? Because this is, they still have orders left. It only mitigated it and it started what? Dropping. It entered. You allow it enter. If you can't see it, you use your imbalance. You see now, it shows that there's price is fully mixed. Now, there should be, if immediately create any order, if you give you a BOS now, then we have a new order block, then we'll be waiting for price to come and mitigate, then we sell down. And what is price doing at that point? Price is doing lower low, lower low, because it's going down. Lower low, higher low, lower low. Here will become, in my last class I said it, here will become, here will become what? Higher low, here is lower low. If it give you any other one now, maybe say this one here will become another higher low, then anywhere it is that get to become lower low. So that is what price is doing. That is how they create their own this thing. It cannot be clear except somebody put you through, or you have something that is highlighting it for you. So I think that is all. So price gave an imbalance, and imbalance means I told you, it means when there's a particular candle moving in towards direction without the opposite candle interfering. So until price go to mitigate it before you take. So they are usually having other orders left here. So that is the final order that I leverage on to this point. So I think that is that. Let's go back to our article. Then we have types of order block. We have the bullish order block, bearish order block. Bullish order block. What is bullish order block? Bullish order block refers to the final bearish candle preceding, that is before a bullish market movement, breaking the market structure higher. It signifies a strong likelihood of providing support when the price retraces to that level. So it's saying that a bullish order block is a zone where the last bearish candle move higher and it creates a market structure, a BOS. So it is possible that when market retraces to that same zone, it will act as support for price to push more higher. Let's go to the chart and let me quickly give you illustration of, let me look for one here. I think I've been seeing one before. Let me remove the imbalance so that I can see properly. Now this place, you can see this is what bullish order block is saying just now. You see the last bearish candle, which is this class candle here, you see it's a bearish candle. The move that moved up and gave you price of structure, it has created what? It has created another block, but if we are doing it's on a higher time frame, not in a lower time frame. It's not saying if price come back, retrace, and what is price doing now? Price is retracing. Like if price retrace to this zone, that is why on higher time frame, when price is retracing to this other block, we come to lower time frame to look for opportunity for what? Buy. We are looking for opportunity for buy when price come to this zone. So if price come to that zone, we know that there's opportunity still left for us to do what? Execute a buy order. So if price come to this zone now, there is a possibility for price to give us a buy order. That means to still move upward. That is on a higher time frame. So we come to the lower time frame and look for a move up formation. We want to see price give us this kind of move, quickly come back, then we take our buy. That is what we usually wait for when price is approaching an order block, which is typically the bullish order block in a higher time frame. So I've explained that of the bearish order block and also the bullish order block. So the bearish order block is the last bullish candle. This is the one. This is the last bullish candle that led to the break of structure. When price come back to there, it pushed down. So because there are still orders left here, and it's because we are doing what? We take all this analysis from higher time frame. So I've explained both bullish and bearish order block. I think let me show you the examples in the article I wrote. So coming to the so what is okay, I've read bullish order block to your hearing, and this is the example. Okay, the example here is this one is on 4-hour time frame. This was the last bearish candle. I don't know if you are seeing my cursor. Let me just put an arrow there. This was the last bearish candle that led to this BOS. No any other candle that is red that went below it. So that was the last place we got as at when price got to that level. Price go lower before, but no one broke above it. It was equal high here. It was equal high. So this was the only one that gave a move that break above this level here, which now form a BOS. So when price come back to that zone, definitely there's probability that price will still higher probability, not even anyhow probability, that price will still move up. And what do we see? When price came to that zone, we go to lower time frame and be looking for a setup for up move like this. And when it come in place, we enter just like what I did in that sell. You take your buy. So that is what bullish order block stand for. So reversal is what bearish order block is. Share to bye. Alright, so let's move down because I'm getting exhausted already since all these videos have been cutting and cutting along the line. So for what is a bearish order block? The bearish order block is the most recent bullish candle before a bearish market movement, disrupting the market structure lower. It indicates a significant potential for price support upon its return. So the same thing that happened, this was the last bullish candle before price move and break structure. Can you see it? And immediately break structure, we are anticipating for price to come into that zone again. You see this movement down, you'll be seeing red. This is where they trap some people. Some people will just enter here and sell, and what you see, price will just reverse. They may not even know that it's going back to mitigate. Do you get it? And before price get there, their money in their account is gone, their equity is gone. They'll start saying somebody has manipulated against them. Nobody manipulated. They don't have insight of what market is doing or what price is doing. So when price got into that zone, what do we see? When price come, just like what I did in 1 hour against 5 minutes, you do similar. Then you say you be looking for opportunity for sale, and when opportunity for sale come, you take your order towards the downside. And here will be your swing, your exit point. And if you trace it, you see price came there. You see it, price came there direct. Don't since your stop loss will be at the top of this pole. You can even put it here in 5 minutes, or you put it here. So price didn't even go towards it, not even near it. All you see is what? Dropping down. So that is what the whole scenario is. Sorry, I think so. That is the whole scenario. What price is doing. That is what price is what doing on bearish. So that is why I said I always made or I lay emphasis on that indicator that you should always identify your POI. When price goes to your POI, go to lower time frame, do this and do that. So let's continue. Now, tradable order blocks. What are the things you need to see before you call another block a order block? Is it tradable or not? The first thing is that order block should be positioned at or near support or resistance level. That is the first one. The second one, other blocks should be located at or near flip zone. I'm going to explain flip zone. I've explained it. I don't know if probably um this video as the mic has stopped before then, but if it not, then it's a double portion for you to digest the information. Then number three, the creation of the creation of other block must involve breaking of market structure. Yes, because that is what we wait for. We want to see market of structure, market going into the OB before we take our buy or sell. Then number four, there should be an imbalance. I always told you that when market create an OB, you just be seeing sell, 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 like what I explained not quite long that. You see, when this OB came up, all we were seeing was sell, 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 sell. Are you seeing what price is doing again? Price went back to that place. Let's check what is going on in 15 minutes. Maybe there's an opportunity. Okay, we've not gotten an opportunity yet. So we've done what we wanted. So let's not just do more than ourselves. Let's leave it that way. At DB, we had another OB now. So as it is now, it is ranging in 1 hour. It is ranging. This is how you know that it's ranging. So this kind of trade is risky. If you try taking down, it might just break out. So sometimes once you hit the first one, wait for another fresh setup. Don't try to go and give them the one you collected. But the arrow is showing that price is going to come down. So alright, so automatically it has a resistance zone in 1 hour. So until everything meets up, we are not taking anything. That place it has been mitigated before. It has been mitigated. It is possible it go back to mitigate it again, but so we don't consider it to be strong more, or maybe the others there may not be that much. So that was said, and let's continue with our class. So when they say imbalance, you see that in this first place where the still this one that led to the break of structure, it was sell, 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 sell. So this is the imbalance you're talking. There's huge imbalance here. So until price go and mitigate it, and mitigation, I told you it is act of reducing, that is reducing risk. Mitigation simply means reducing risk. And how? If somebody who take a sell order here and somebody who wait for price to take a sell order here, who is taking much risk? It's not somebody who take a sell order here. There is possibility that price may not come down. But you that take a sell order here, what will be your stop? Your stop loss will be here. This same person's stop loss will be here. Now, if it's removing maybe 50 cents from your own, it will be removing like $3 or $4 from his own. So that is what mitigation means. So you should wait for price to mitigate to reduce your risk, so that when you put your stop loss here, even though it falls, it go against it, you only lose little, just fraction of your equity. For the person who may always who went to take a sell here, who may rightly risk or lose all his trade or equity. So that is it. That is what this aspect is explaining. I guess you understand what I'm trying to push out to you now. So that is what it's explaining, that you should wait for price to mitigate, because if it doesn't mitigate, all you are seeing, all this down move is imbalance. On the price come back to mitigate there, then you take your order as expected. Then he made mention of one other thing, that you should see price at the support zone. That one is for the higher time frame, and I'm going to show you now. Since we are doing a sell, we want to see price at a resistance zone on higher time frame, which is the 1 hour, which is the what? 1 hour. So let's go to 1 hour. Before we took that trade, was price at a resistance zone? Yes. Our POI is at the resistance zone. You can see that. You see it. You see that there's a resistance there. Where is my cursor? You see that this is a resistance 3, that is the pivot line resistance. Then there it comes where those of you asking which of the indicators you should put on your chart. Definitely, if you can interpret all, you need them. But if you are scared or you can't put all, so that you want lesser interpretation, as when you put your Fibonacci retracement, put your Fibonacci support and resistance, put your pivot line. So the pivot line has 3 support and resistance zone. So if any of these what is it called, any of these area of interest fall on any of these areas I just mentioned now, definitely when you're taking your trade, you won't panic, I think that is clear now. Yeah, that should be clear. That is, when you find them like this one now is a clear one. We can see that is at our price is at our what resistance zone of the Fibonacci, sorry, pivot line, which is that which I just showed you. And if I zoom low, I think you can still see another this thing there. That green line is this Fibonacci support and retrace resistance. So the conditions for this is absolutely correct. It is absolutely what okay. So the price may still even drop because it's at its resistant zone. Then regarding the flip, where they say your areas of interest will be at a flip zone. Now let me explain what flip zone is to you. Flip zone are zones where where we have the significant support and resistance level. The significant support and resistance level. That means areas where there is multiple resistance or multiple support move. Now looking from this point here, this is it acted as resistance 1, resistance 2, resistance 3. Only this place. I don't know of the other ones that have taken place. Price got there, price couldn't go, it came down. It got there the second time, it couldn't go, it came down. Third time, it couldn't go down. It was on the fourth time, it now broke above it. Immediately broke above it. That zone now not longer act as what resistance, it will be acting as support. Because price has broken above it. So this area are called the significant areas of support and resistance. Significant areas of support and resistance. So price has reacted on those zones multiple times. So when price come to this zone now, it will be acting as support. So they said they want to see if you see your area of interest, that means your order block in these zones, in this area, in this kind of area, it signifies that the probability of it taking effect is much high. So let's check it. That is number 2. Your OBs should be located at or near flip zones, which are advantageous for reversal entry. Yes, so it is advantageous for reversal entry. That is what it implies. Hello, that is what it implies. So I think that is all. Number 5 is making repetition of something similar to number 1. Then talking about the time frame to use. Talking about the time frame to use or how we do the matrix. They say whichever method you are trading, you need to have a good time frame matrix in place so that you don't just place order like a gambler. Yes, these are the things some people don't have in place. They will just come and start trading. If you have been trading all this while and don't have this knowledge, my brother, you are gambling. No, my dear sister, na gamble you dey gamble. You know trade, na gamble. Don't call yourself. This is from this moment now. You call yourself a trader. Initially, you are only what gambling. So if you are using the 1 month support and interest, that is order block of 1 month, you should check confirmation in 1 week. Then you should take your trade in 1 day. If you are using 1 week as your area of interest, you should check your confirmation in 1 day, then place your trade in 4 hours. If you are using 1 day, check your confirmation in 4 hours, use 1 hour to do your entry. Then if you are using 1 hour like what we are doing, use 15 minutes to check your confirmation, then you place your trade in 5 minutes or 1 minute. So I think at this point I have to stop here. So whatever is remaining will continue in the next class. Thanks for taking so much time to please kindly follow the instructions that I gave so that you practice them. I believe you saw some of the trades that I took earlier before my other mic went off. So practice it. Is working. I'm not coming to cap what is not working for you now. How about I go to like that? I'm your sure guy now. So I'm just kidding anyway. Please practice so that you don't expect me to be giving you signal again. No, now you should be giving people signal. By now you should be seeing yourself like a pro trader. You are a big trader already. Or whoever is making million, these are the same things they have in their head. You just need to be building yours to get to their level. But this is how they started making that big money. So welcome to the game. I will call it a wrap.